All right, 12:01. I'm going to get started. So, want to welcome everyone to the April 6th, 2020 NAFA Town Hall meeting. I'm excited to have everybody here. My name is Brock Jolly. I currently serve as the treasurer of NAFA nationally. And on behalf of the entire executive committee and the board and the staff at NAFA, really want to welcome everybody. We know that these are trying times. These are interesting times. These are unique times. And I'm certainly excited to have everybody here. On behalf of NAFA, like I said, we're trying to do some things to keep the sense of community that is NAFA, as well as try to give you some ideas for things that you can do to sharpen the saw, to get better, and to really make a meaningful impact in the lives of your clients, your family, your business, your staff, et cetera. And so, as most of you are aware, we've got a series of town hall meetings. This is obviously the next in that series. We're excited today to have Professor Jamie Hopkins with us. I'll give him a formal introduction here in just a few minutes. But really, really excited to have you here. And we're going to cover a lot of ground. We're going to keep things to probably just a hair over a half an hour and let you get back to your day. So with that, like I said, on behalf of President Cammie Scott and the entire NAFA Executive Committee, I want to welcome everyone to today's webinar. I was asked to share a few thoughts with you. So a couple of thoughts. It's interesting. We're all getting adjusted to this new normal, and we're all doing something that in many ways we've never done before. And I think I've had conversations with advisors around the country, with lots and lots of NAFA members, and the discussion has always been very positive. And I think times like this really challenge us as advisors to get better. And, it's interesting. I was talking to somebody over the weekend, and his comment, I think, was really apropos. He said, I feel like the last 2 weeks we've been playing a lot of defense. And whether that is holding people's hands, assuring them that, we'll bounce back from this downturn in the stock market, or this is the reason why we built the portfolio the way that we did, or there's reasons why maybe you've got permanent life insurance or annuities as part of your overall portfolio, or making adjustments to a portfolio. And I hope that we're at the point now where maybe we can start playing a little bit of offense. And everybody's sort of adjusted to things. They're used to, literally 30 seconds before we went live here, my 6-year-old son walked from his kindergarten classroom, which is our dining room table, down into the financial planning firm, which is our basement. And so we're all going through that. And, just adjusting to that, having some grace in our lives, and understanding that everybody's adjusting to it, and trying to figure out ways that we can all be proactive and add value for our clients. And in that vein, I want to turn it over real quickly to NAFA CEO Kevin Mayo. And I'll tell you, I said it when I hosted one of the webinars last week, and I'll say it again. I'm really, really proud to have Kevin as our partner and have Kevin leading the helm at NAFA, because I think he continues to just have a calm, steady, consistent demeanor and lead with a vision for NAFA and for all of the members and even non-members who NAFA represents. And that's exactly what we need at a time like this. And it's really, really encouraging. And I think, it's times like this in crisis, there is opportunity. And I think understanding the opportunity that NAFA provides to be a sounding board for us as advisors, but also to create content, to create ideas, to advocate, to differentiate on behalf of our community is really, really important. So I'll let Kevin share some of his thoughts and just sort of the current state of affairs from Telestar Court. So Kevin, I'll turn it over to you.
Hey, thanks, Brock. And again, good morning or good afternoon to everyone. Thank you again for joining us for today's NAFA Town Hall. We've been doing these for the past few weeks as a service to make sure that you as NAFA members can stay abreast as to what's going on as we deal with these crazy times, to provide you with information that can help you stay on top of your practice, help you do better as a professional, and help you better serve your clients. So again, we appreciate you joining us. If for any reason you've missed any of the previous town halls, We have all of these archived, and they're available on the website, and you can view them on demand. Last Thursday's event, which was on the CARES Act itself, we had 2,317 people on that webinar. So absolutely amazing the number of folks that we're reaching with this, either live or that are looking through it, looking at it later on demand. So please take a look at all that stuff. Because the webinar last week was so big and there was so much interaction in the chat room, we've decided to have a bonus session this week, and that'll be Wednesday, April the 8th. You see there on your screen. We have a Q&A session with the panelists that were on the CARES Act webinar last Thursday. And with that, we've taken all of the questions you guys posed in that chat box, and we've consolidated them into topics, and then we're going to have the panel set back and address that topic and provide you with much more substantive information. There's still an awful lot in the CARES Act that requires interpretation, and so our government relations team is continuing to work with the Department of the Treasury and others to get the most up-to-date guidance as they're talking about how you can walk your clients through the payroll protection program, how you can apply for these emergency loans that are in place, et cetera. They can help you with your practice, but also help your clients with their practice, and arming you with the right information you can pass along to them. So continue to keep an eye on the updates that we're sending to you via email. Continue to keep an eye on what's posted on the NAFA Advocacy Action Center blog, and keep an eye, of course, onto these different webinars and updates, because lots of good information, lots of stuff's flowing. You know, when you go out and you spend $2.2 trillion in one day, the federal government, go figure, might not have it all together on day one, so it takes them a little while to come up with the information. But we're making sure that we disseminate that out to NAFA members regularly, so please keep an eye on it. We've continued to, of course, work on your behalf, as many folks like Brock just mentioned have to work from home, making sure that different states where they have regulations that require you to do business in a certain way, for them to be flexible right now during this time and understand that we are operating in a unique environment, an environment that our country's never seen before. And so making sure that some requirements are laxed in a bit so you can best continue to serve your clients and provide that sort of advice that they need so they can be properly prepared for their financial futures. So we're staying on top of all that. And what I mentioned to you also last week was that we've also written all the major carriers, and we've asked them to make sure that your compensation continues to flow unabated to you, because you've got to be financially secure so that you have then the state of mind and the confidence that you can sit back and serve your clients well. And so again, NAFA's advocating on your behalf each and every day and every way we can. So you see the special events we've got this week. We mentioned the event on Wednesday with the bonus session with the CARES Act panel. On Thursday, we've got a great NAFA live event. We hope you'll join us for that with Bill Cates. And then next Tuesday, April 14th, Tom Hagner's going to come back. We had so many people that talked about how great his session was last week or 2 weeks ago that we're bringing him back, and he's going to be back on April the 14th. So keep an eye, lots of great activities and great opportunity for you as professionals to gather together to get some quick information and then be able to go about your day. So without any further ado, I'll pass it back to Brock. Thanks for your time.
Perfect. Thanks, Kevin. I appreciate it. And with that, it is my pleasure to introduce today's guest speaker. And Jamie Hopkins is somebody I've had the opportunity and the pleasure to get to know a little bit over the last couple of years. And so, he's really done a ton of things in this industry. And so I will read some of the highlights. But Jamie is the managing director of Carson Group Coaching and director of retirement research at Carson Group, which is a national wealth management firm many of you are familiar with. Ron Carson leads that, one of the top wealth management firms in the country. And Jamie and his team offer coaching and partnership to financial advisors. He's a nationally recognized writer, researcher, and educator, a regular contributor to big name publications like Forbes, Investment News, and Market Watch. He's been published in dozens of financial, educational, and legal journals. And he's the media's really go-to expert on retirement income planning and the related tax law. Prior to joining Carson, many of you are familiar, Jamie was the co-director of the New York Life Center for Retirement Income and a professor in the retirement income program at the American College of Financial Services. Jamie's done consulting work for lots of Fortune 500 companies, really highly sought after speaker in the industry. He's developed educational materials for lots of programs, including the CFP, COU, CHFC, and the RICP program. Interestingly, the RICP program has over 6,000 graduates since its inception in 2012. And I'll tell you, I've got that designation. It is one of the best and most deep dives on a subject matter in terms of focused knowledge on an important topic like retirement planning. So I certainly commend Jamie and his team for their attention to detail. Jamie's also been featured on Wall Street Journal podcasts, NPR radio, Fox radio, big one here, NBC 10 Philadelphia, his hometown, PBS, USA Today. And then interestingly, I would guess that there aren't too many people who have been named a 40 under 40 awardee by both Investment News and the American Bar Association, which he has. He's the author of numerous books, including a really good one that I really liked called Rewirement, Rewiring the Way You Think About Retirement, which was published in 2018. He received his BA in political science from Davidson College, where he was captain of the Division I men's varsity swim team. And then how about this? I mean, this is going to prove just what a big nerd he is here. Attended Villanova School of Law, JD, graduated with honors, MBA from Villanova Business School, and he also has an LLM from Temple, along with 4 financial planning designations, CFP, COU, CHFC, and the RICP. So just a wealth of knowledge on sort of the interrelation between the tax, the legal, the investment, the insurance, how it all comes together to do really, really good planning. And I know Jamie's going to talk about some of the things that they've got upcoming from the Carson group that are under his umbrella. So with that, I'm excited to give it over to Jamie with a big NAIFA welcome. Thanks for being here, Jamie. Excited to hear what you have to share.
Thank you, Brock. I think that's probably the longest bio I've ever heard of myself there too. So I was like, you pulled a lot of stuff together. I appreciate that. We'll see if you can give me the sharing again. We'll put my slides up here in a second. But I want to thank, NAIFA for having me on here, for Kevin Mayo for leading NAIFA through this time, and for all the advisors out there and insurance specialists and everyone, for all the great work that you do at this time too. So let's see if this thing will actually go into slideshow and look pretty nice on the screen. There we go. So I have about 16 minutes at this point because my bio took up 3 minutes. But I do want to thank everyone for having me on. I'll skip through this. I notoriously, as a professor, I create way too many things in slides. I will do my one pitch here at the beginning. Basically, if you're interested in coaching, reach out to me. We have some, kind of deals, I would say, going on right now, just trying to help advisors get through the next couple months, support them. We're actually giving out a free coaching session right now with our executive business coaches. And that's something, Brock's been, has been part of that before in the past. And we pretty much coach about 1,200 different firms out there. So if not the largest, one of the largest in the financial service. All of my contact information on this slide, jhopkins@carsongroup.com. And easiest way too is at Retirement Risks on Twitter is a good way to follow. So I just want to hop over here, as I said, don't have a ton of time. So first part, I would definitely stress you guys have a great opportunity to come back on Wednesday and listen about the CARES Act, get a pretty deep dive into that. I'm not going to hop into this too much. I have my own presentation materials, and as I said, kind of understanding what it's actually in all the Treasury regs. The one thing I just wanted to stress for people right now is really on the PPP piece, so the Paycheck Protection Program loans. So you have the NAIFA call later this week. Definitely hop on there, learn more about this. I mean, this is something that really rolled out Friday, and had a tough Friday, I would say, but that's to be expected from as you heard, right, rolling out $2 trillion in a day and trying to have this system ready to go in a couple days. Really, all in all, kind of commendable from the ability of the banks and everyone to get this up and running. I worked with one company on Saturday. It took us over 4 hours to actually get it through the PNC system. And it just literally kept timing out, system crashing, issues back and forth. So this right now, it's getting better every day. Is going to get better here for submitting this. But one of the big things I say say is, your business is your client's businesses. This is a big way to add value right now. So just stay on top of it. I've been kind of saying there's 3 things to keep reading, have available. They're all really from the Treasury Department. You can find them on their website, but they're short-term regs that they came out with Thursday, overview of the program and their application. Just have those 3 things like on your desktop, wherever it might be where you're working, because those are where you're going to refer to for a lot of the clients that you're working with. The other thing is I get a lot of questions. I probably had over 10 about this just this morning. Banks are treating this all different because there's not a whole lot of regs. There's not the guidance from the Fed and Treasury yet. You've kind of got to just roll with how the bank is doing it. And banks are actually calculating these loans differently. They have different processes, different documents, different clients that they're serving. But generally, you've got to kind of right now at least go to the bank that you're doing business with from a business side. We might see this open up over the week and into next week. I think by April 10th, when self-employed need to be able to file, we'll see that expanded out. But right now, it's a little bit locked down and different banks are looking for different things. Bank of America kind of came under some heat on Friday for requiring, I think, the checking and the lending relationship on the business side. And so people had tens of millions of dollars with them and couldn't even access the loan. They've kind of updated that, right? That was day 1, phase 1. So this is all moving forward. So again, just try to stay up atop of this as much as possible, right? Keep checking the banking websites, have the forms, help your clients get this stuff scanned up and ready to go. It is kind of a first come, first serve basis. They're not going to run out of money this week, but the government, has said last week, they kind of expect to run out of money in this program. So, faster is better here. Some amount of, proactivity, as you heard, going on offense instead of defense is really good. So that's the one bit about the CARES Act. I just wanted to kind of stress that important piece. So part number 2 here, this is where I wanted to spend more time, and this is kind of the behavioral side. And I pull up this thing. It's a little cheesy, right? And this is, I've got 3 kids. You go in the doctor's office, and you might see something like this because, kids struggle a little bit with expressing their emotions and how they're feeling. And I would say, honestly, a lot of people right now are like that. I feel that a little bit too. I think I've been very blessed, to have a home office, to have a setup here, so I'm not kind of adjusting the same way as others are. But I don't always know exactly how I'm feeling during a given day right now either. And I think that's a lot of your clients. It's a lot of you. And I think the most important thing about this is to actually understand that it's okay to have these emotions, to actually give our clients, right, the permission to have emotions, right? To feel the way that they're feeling. And whether it's with ourselves, with our spouses, family, loved ones, clients, right? To really just give people that emotional, right? As I said, kind of ability to say, hey, look, it's okay to feel different ways right now, whether it's miserable or jealous or sick or afraid. Those are all okay right now, that this is different than kind of your normal thing. And one of the things that we often do, right, and probably a lot of you, write out and plan for is some type of goal-based planning. Now, I would also say, write out things and think about timeframes right now. So for getting your clients to plan, whether it's about risks or things they want to accomplish, and thinking about what's your next concern or what's the thing you want to accomplish over the next month, staying safe, staying inside, getting through the pension, the paycheck protection program, loan process, whatever it may be. Then what about 3 months? Okay, hopefully we have some stability and you're thinking about the planning at that time. A year from today, do you want to, where do you want to be 10 years? And it's walking people back out to thinking long term, right? That the next month, 3 months, I think that time frame has a lot of uncertainty. You start thinking about a year, year and a half, 2 years, and hopefully that clarity of, what, things will go back to normal. This too will pass, starts coming back into effect. And I think most people have gotten to this point now too, right? That this is not just a stock market event. We have a Monday morning call to all partners at Carson Group where we talk about the markets. And, I think to some degree right now, yes, what the markets are doing are very important. That remains to be important, but this is not a market event, right? This is a national worldwide pandemic and health emergency event. So it's very different. Somebody brought up last week, I heard that this is really like a national hurricane, not really an economic event, right? It's coming through a disaster that's nationwide. So one of the things I thought was really interesting, I saw this maybe 2 or 3 weeks ago, which was, when the market was starting to pull down a little bit on the first fears of how was coronavirus going to impact people. I saw this, aspect of, when you drop, how much does it take to come back up in the market? And so I kind of took this and said, all right, let's think about this from a client perspective and the pain point of market downturns. The reason we do goal-based planning, the reason we have diversified portfolios. And from a behavioral finance standpoint, a lot of this comes back to, these conversations about what can we handle via risk. And so it's kind of risk tolerance versus risk capacity discussion of what can your clients actually manage, and then how tolerant are they? You might actually have a lot of risk capacity, but still be very risk averse, meaning that you actually feel the pain from risk very high. So one of the interesting things about this, right, is people tend to feel pain, right, from the investment standpoint, right, loss. We typically call this loss aversion. We feel pain 2.5 times more than we feel the same kind of unit of pleasure from gain. So the idea of that being, right, if you lose $1, it's 2.5 times as painful as gaining $1. So to kind of be even, another way to say it, if you lose $1, it's like gaining 2.5. That the pain point of that versus the pleasure side of gaining, right, 2.5 times different. That's a really big deal. And so if you think about what's occurring in the market side right now, or even just people's finances, right, their assets as they spend down, as they lose jobs, as they go back to their emergency funds. Well, what starts to happen here? Right, and this isn't even always returns, as I say, like emergency funds. Just if that depletes because you're spending on things, you're essentially still seeing that account go down. And so one of the things here, right, if you think about this, this is if the market goes down 20%, you go from 100 to 80. What does it take to get back up to 100? Well, you need a 25% return to go back up, right? And kind of going down, if you lose 60% of your portfolio, it takes basically 150% of that to get back up to even. Now, tying these two concepts together, right, I thought, well, wow, what does that mean emotionally? Because if you take that aspect that the average person is 2.5 times more averse to loss than they are to gain, right, what actually happens, what you see is, one of my concerns going through this, if we're not focused on the emotional side of people, then what we're going to get is a whole demographic, a whole, possibly cohort of the country that fundamentally changes from the way they view, right, investing. And we saw that through the Great Depression, right? It totally shaped a whole group of people. And they never really, lots of them were just stuck in this old way of, right, they, whether you called it hoarding, whatever, but, everyone had family members, right, grandparents, parents, whatever they might be, that really their spending patterns and investing and the way that they just looked at resources was fundamentally changed. And part of that actually is rational if you look at how people feel from this. So I was thinking, right, if you're down 50% in the market, you need essentially, right, 250% up to get back to emotional, because not only do you have to get back up to recover, but you also, right, would essentially need to go above that to get that pain back to feeling even again, because it is so painful to lose assets, to see this go down. And so, I was kind of thinking, okay, what happens if we go, down the 60%, $100 went down to 40, you'd need this 375% return to essentially offset the pain with an equivalent amount of actually happiness, right? So where would you actually have to get to where people would feel emotionally equal after suffering that loss? It's a very, obviously this is not something you'd sit down and talk through clients with, but I think it's a very interesting thing, because this is one of the reasons why we like to protect. And I think that when we look back at 2008, 2009 through that, think about somebody who there was in their early 20s or late 20s, right? A decade ago, lost their job. And then fast forward, it's another 10, 12 years later, and they might be losing their job again. Now at their late 30s, they've gone through a financial, right, crisis, and now this world health crisis, and they might be depleted again. They might also, that person might have a lot of student loans. I mean, it's very hard to start believing that that person is not going to change their fundamental behavior moving forward. I think that you look at people in their 50s that maybe were a decade ago starting to save for retirement, feeling a little off put by the 08 through 10 run, then had a good run, and then all of a sudden now, are they going to feel off track again? And what is it that we're going to do as advisors to get them back back emotionally to feeling on track. And probably the easiest way to get there is, right, think about long-term decisions, right? Or long-term thinking and goals. So this is one of the sayings. I was talking to Aaron Klein, the CEO of Riskalyze, a couple weeks ago, and a really interesting thing he said to me was kind of around this, and I've changed it a little bit since then. But he's like, what we try to do is we try to remove risk-based decisions. And we got to this conversation about really people make short-term decisions. You make a decision today, whether to trade, to buy, to spend, whatever it is, but it's all short-term decisions, right? I'm really not making a decision for something tomorrow today. I'm going to make that decision tomorrow again. Most of our decisions, right, are really short-term decisions, but with long-term goals in place. And where we really get in trouble is when our emotions, right, it's not removing emotions, but it's when our emotions take over and we no longer see our long-term goals in place. Because really all we can do is make decisions based on the information we have today. And that's to some degree why the markets are moving so fast, right? We've had these 1% swings all of last week, probably again today, at least from the looks of it this morning. And right, the market's reacting fast to new information. But individuals, we can't take emotions out of this. And if you start looking at what the behavioral finance world is doing, they're actually moving away from that terminology. Let's take emotions out of it. No, emotions are actually important. And emotional data in our mind is actually very important too. It actually helps us make decisions. Rational decisions actually do require emotional data. And what we have to do, right, is make those short-term decisions still with our long-term goals in mind. Right? That's really what we have to do. So it is focusing, what is the outcome that we want to occur? And does our decision today align with the outcome that we want? Right? And I think that's going to be the challenge over the next couple of months for advisors is, can we keep people focused on the long term when the short term is so important? Right? That we just have to stay safe. We've got to stay healthy. We've got to keep our businesses up and running. We've got to look for this, trillions of dollars that the federal government now is kind of putting back into the economy to help protect it. So when things are okay or improving on the health side, we're able to revamp up, right, the economic side faster. So again, I think what you're thinking and talking to clients, right, is again, stay on that goals, right? Why are we doing the things that we're doing? Right. I think that especially right now, I think 2.5 weeks ago, it still made sense to stay the course, stay the path. I think understanding, though, that, look, when things change along the way, it's okay to make changes. But that's why we do planning. It's why we focus on the long term. It's not short-term changes. It's long-term. So are we still aiming towards our goals with the changes we have to make today? So again, lead with that planning. I'd say write down your 6 most goals. Have your clients write down goals right now for the short, mid, and long term, right? Those are important things. And when it comes to the mind and emotions, right, tie those things together and understand that it's okay to be emotional. Allow your clients to understand it's emotional. We actually heard, some clients saying, hey, I don't know if I necessarily want to call my advisor because I know they're so busy and I'm just really worried. I know they're just going to tell me the same thing, right? And that means we have to give them permission to, to reach out, to look for these benefits, right? And just, as I think, right, be gracious, be kind, understand that everything's different. We have a new normal, as we heard, kids coming in, out of the rooms, the calls might not always go well. The webcast information, right, might be a little lagging from time to time, right? So try to be understanding, accept people's emotions right now, and keep that long-term in sight, because really these short-term pain pieces are going to have long-term impacts. And we just have to recognize that those are real things and kind of not try to push that off and be overly analytical just on the numbers side right now, right? We can help manage expectations better than we can actually manage outcomes. We can't control what the market does, but we can keep our clients focused on the long term there. So again, I know it's right up to our time here. So I did want to thank everyone here in NAFA. I'll let you close back out here. But thanks for having me on. Again, if you want to dive into some of this and have some behavioral conversations, happy to. You can reach out to me, jhopkins@carsongroup.com. If you're interested in one of those free coaching sessions, reach out, right? There's no credit card information or anything you have to give to sign up for one of those, or follow me on Twitter @retirementrisks. And again, Brock and Kevin, thanks for having me on. And I guess you'll probably grab back control now.
I think that's the case. Yep. Perfect. All right, we're back. Jamie, thanks very much. Great stuff. I know we were short on time because your bio has so much great stuff in it. So certainly commend you for the continued industry leadership and for all you're doing. It's interesting. I have personally been part of Carson coaching since probably 2005 or 2006. And just some great thought leadership, and just year in and year out, they make it better and better. Just some great things to be thinking about and things to be aware of, and just some great industry leading ideas. So thanks for all you guys, to you and Ron and the entire team, for all you guys continue to do within the industry, and you're leading from the front. It's interesting. One of the things that Jamie said was around this concept of you can control what you can control. And there's a lot of things right now in the world that we can't control. But I would just add to it, goal-oriented people find ways. And I was sort of scrolling through the list of people on this call, and we've got a lot of people who I would call goal-oriented people. You set great goals, you figure out ways to do it. And we've got a lot of barriers right now. We've got a lot of things in our way. But I know that NAFA for 130 years has been figuring out ways to make things happen, and will continue to do that. Please pay attention to the upcoming town hall meetings. In addition, all of our past town hall meetings are archived. You can go check those out. They're open to all members and non-members. NAFA, really, we try to be a voice for the entire industry and a resource for all of you. That said, we really want to have a focus on all of our members being advocates on our behalf, and reaching out to a non-member or two and telling them the importance of NAFA. Because I'll tell you, with things like a $2 trillion stimulus package, the only thing I know for sure is that there's likely going to be some change. And we as advisors are going to need an advocate on Capitol Hill and in the 50 state capitals acting on our behalf for our interest and the interests of those clients who we protect. So please be part of the solution with us. Jamie, again, thank you for all you continue to do. Look forward to seeing everyone back here on Wednesday for our special event around the CARES Act, and then again on Thursday for our next regularly scheduled town hall meeting with Bill Cates. Everybody have a great day. Look forward to seeing everyone again soon. Thanks very much.